Hello everyone and welcome to the very first episode of Wealth Investor. My name is Yuri and I am a wealth investor who is focused on building wealth through investing. So in this very first episode, I would like to introduce my long-term investing strategy and my plan for financial freedom. If you are wondering, I am 27 years old millennial who is just now starting on my investing journey. It's better to start now than ever, right? I keep telling myself. I have realized that the ultimate goal in life that everyone is trying to achieve is freedom. So I need a clear plan to achieve freedom. And after all of those wasted years, I finally came across the best investing strategy, in my opinion, the growth investing. If I want to achieve freedom, then it means living financially free and doing anything I want, live anywhere I want, and have a stable income for my future endeavors. But first, we have to solve the problem of financial freedom. There are many strategies out there, and I will probably make videos covering those investment strategies in the future. But what I found is the best way to live financially free is to have passive income, around $100,000 a year. I think $100,000 a year income is more than enough to live financially free. So the best way, in my opinion, is to have about $4 to $5 million in dividend stocks. But I am not going to start a dividend portfolio. But instead, I'm going to start a high growth portfolio that consists of high growth companies that have potential of 5x to 10x in the next 15 years. And here's why. I am not starting with dividend portfolio because I will be shooting myself in the foot by reinvesting after tax dividend income back into my portfolio. If I have dividend portfolio, I would be paying taxes on all of those dividends that I am collecting throughout the year. Well, those dividends taxed as ordinary income, which taxed as you would make money working at McDonald's. It's the same thing. So why would you take out gains in the form of dividend to pay yourself, then pay taxes on that income, and then turn right back around and reinvest into the same portfolio? It's like you reinvesting your ordinary income. You just realized gain, paid taxes, and reinvested that money back into the same asset instead of just holding that asset for at least 1 year and 1 day and pay much lower long-term capital gain tax. Does not make any sense to me whatsoever. Instead, here is my plan for financial freedom. And it goes simple. Make, invest, retire. First, we work to make money and live below our means. Then we take all excess cash and invest it into high growth assets. And then retire with dividend portfolio, aka passive income. So in this portfolio, the plan is simple. I'm going to put at least $1,000 of my earned money from my regular job every month into this portfolio. Then I'm going to identify high growth companies that have potential of 5x to 10x in the next 15 years. I will invest all of my available cash into these companies. I'm going to hold all of my picks for the next 15 years and grow it to hopefully around $5 million. Then I'm going to sell around $4 million worth of stocks, pay long-term capital gains, and then invest that money into dividend stocks to be financially free. So in this case, after 15 years, I will end up with 1 million in growth stocks and 4 million in dividend stocks. I'm going to use dividends to pay for my lifestyle and also will try to grow 1 million for fun just because I enjoy it. Alright, so let's take a look at real example. How can we actually achieve this? So I have pulled up investor.gov calculator. This is the most respected compound interest calculator in the world, I would say. But here it is. So let's say we're going to start with $10,000. This is where my portfolio kind of sitting in. So I started my portfolio in September, but let's say that we are starting in 2021 and we put $10,000 initial investment. This is how we're starting our portfolio, and we're gonna put $1,000 every single month for 15 years, and estimated interest return. And since it's high growth portfolio, you can see I'm already up 30% on my portfolio. If you can see on the left, open P&L, I'm up 30%. So it hasn't been a year yet, but I really believe that I could maybe achieve 38% interest rate. This is just out of my head. I might be able to do more. I might be able to do less. As you can see, one of my Tesla holdings is at 66% so far. But if I were not buy this last two shares at 785, my average would have been even lower, and my position used to be at 110% on Tesla. But since I bought the dip recently, when Tesla dipped below 800, as you can see, I got two shares at 785. So these numbers, we can achieve them as long as we can pick high growth companies. So far, Tesla's doing the best, and Apple's already 15%, and I don't think that 38% is undoable. The average market return is 10%, but assuming that this is a high growth portfolio, I'm gonna put 38%. This is my goal every year. So over 15 years, we will have $5 million. So it is doable as long as we maintain 38% interest rate. That's what's really important. If we can pick good companies and have massive returns, at least of 38% every year for our portfolio, that's the goal, that's what we're aiming for, then we might end up with $5 million at the end of 15 years. So then, according to our plan, I will take about 4 million out, leave 1 million inside the portfolio, and put 4 million into dividend stocks, and then live off dividends for the rest of my life. My goal is to get about 4 million in dividend stocks and then leave 1 million in high growth. So then this, after 15 years, we're gonna have $1 million. We're not gonna put anything extra, and we're gonna put another 15 years. So just to give you the perspective, I am 27 years old. So 15 years from now, I will be 42. So at 42, I'm thinking that I will have $1 million left and 4 million in my dividend portfolio, which will keep me alive. But this 1 million, I can do whatever I want with now. At 42 years old, I have 1 million in growth stocks, so I can play with. And let's say I keep playing with my growth portfolio, and we're gonna maintain our 38% for the next 15 years. So after 15 years, I will be 57. So I'm gonna be approaching that retirement age. So by retirement age, I really want to accumulate 120 million. I mean, this is the power of compounding. This is why I'm growing a growth portfolio. Because really, after I have my dividend portfolio, all I can do is focus on my growth portfolio. And as long as I'm maintaining interest rate of 38%, as long as my portfolio grows 38% every year, I know it sounds kind of ridiculous, sounds a lot, but really for the high growth portfolio, look at just Tesla. If you just had Tesla in your portfolio, you would be up way more than 38%. So this is conservative. But there it is, $1 million. This is after 15 years. This is when I'm 42 and $1 million, don't contribute anything else, another 15 years, which is approaching like retirement age. I might grow this portfolio to the massive amounts. And see, total contribution only 1 million. And it really starts skyrocketing after 5 years. So hopefully you got some clarity on my plan. So now let's see how our portfolio is doing. I have started this portfolio in September of last year, so September 2020, and here I want to show you my transfer history. I have roughly put $11,000 into this account, and as you can see, the first deposit was on September 4th, and I've been depositing money. This is my savings from 2020. This is stimulus in here too. And pretty much I said that in 2020 I'm gonna try to build my portfolio, and I'm gonna find out the best plan to grow this portfolio and retire rich. So as you can see, there was a withdrawal of $2,000, but pretty much I just wanted to see how fast the money available in my account, and to my surprise the money was there in 2 days, I think, which is props to Webull. I like it, so that gave me confidence that Webull is alright to withdraw money, deposit money. So I put it back, the $2,000, and as you can see there is a $3,000 188. This is because I was day trading, and I lost $188 on day trading, and that was my lesson, not to ever day trade ever. That's not for me. I'm more of the long-term investor, and that's why I have made a channel, Wealth Investor. So as you can see, this is my account. Currently we are sitting at $14,480, and we are up 30% for our account. And if we're gonna look at our performance, there is our P&L, and if we look at all the time, so far we accumulated $3,200.38 since we started our portfolio. And if we can see, we got a small dividend, which I don't really care about. That's Apple, and I don't mind paying taxes on $2. I'm not growing dividend portfolio. I'm investing for high growth, and Apple just happened to be there. So as you can see, I don't have any options. I don't have any crypto, and here's my short-term trades. You can see it right here. But here's what this is when I was day trading. But here is P&L, and comparing to the Dow, and for the all-time I am 35% up versus Dow 10%. So I'm outperforming Dow Jones, so I'm outperforming the market. That's what we want to be doing. So far this is our performance, and if we're going back, you can see all of my positions over here. So currently I have Tesla, Facebook, and Apple, and Microsoft. So let's go through each of them and see what my thinking around this. So I'm thinking, if you can see here, this buy zone. I think this is a buy zone for the Tesla. And when I'm buying these high growth companies, I'm looking to buy them on a dip. I'm looking to buy them on the red days. So I bought 2 shares over here, and as you can see in this log at 785, I bought 2 shares. All right, and then I was buying shares below 400, so 448. This is my first share. I bought it, I think here, somewhere here, 448. I bought it first share, and then Tesla went down. I think I bought it here, then Tesla went down. And this is the important lesson, because I just invested my first dollar into the stock market and I'm already down. I'm already down, but I am keeping my eyes on the prize, and I know that I'm a long-term investor, so I don't panic and I load up on shares when I'm down. So I average down, which pretty much everybody says not to do. Do not average down. But since I believe in the Tesla and I believe in high growth and Elon Musk, and pretty much that Elon Musk is going to electrify America, I believe strongly in that. So I am loading up when Tesla's going down because I know that this is a temporary. So I'm just gonna load up as much as I can. So I start loading up at 395 and then at 368. So at lowest I was able to invest at 368. Was probably somewhere over here. I mean, we can see the date. So at 368 I bought it on September 23rd. So September 23rd. So I bought it here. See how it dipped? I bought this dip. That's why we want to buy these dips. So right now we have the same opportunity over here, which is currently Tesla is trading around $809. I don't really care because I'm really waiting for it to drop even more. And right now, as you can see, my available cash is only $340. I'm in the process of transferring another $2,000 for these first 2 months that I haven't transferred it yet into 2021. So I'm gonna be on the lookout for this buying zone. If Tesla keeps going down, then I'm gonna be buying. I'm gonna be buying this and accumulating as many shares as I can. And this is important part here because I think that the best way to approach this type of strategy is to focus on amount of shares you have instead of the P&L percentage. I mean, these percentages don't mean really anything because, like with the Tesla example, I bought shares there, I bought shares over there, I bought shares at highs, at lows, and really the average doesn't really matter. So I'll be buying Tesla around here, and let's see if it happens. Today it seems like it wants to bounce from this area, which we have still potential to dip to this area. And if we do, I'll be on the lookout to buy. And if I have to, I would be dipping in the margin. But I think my rule for the margin is no more than 20%. I don't want to get heavy deep in the margin. So here you have it, guys. Number one episode on Wealth Investor. Thanks for watching, and let me know in the comments below what do you think about this strategy. Let me know what kind of investor are you? Are you day trading? Are you dividend investor? What are you doing? Let me know in the comments below, and I will see you in my next video.